In today's video, we're just going to go over one of the recent setups along with a trigger example, because there are still some of you that don't understand what a trigger is. The trigger is essentially price action that tells you that it's worth placing a bet against one of the zones that I give you to potentially trade against. Now, what we looked at, I think this was, did I do this Monday or Friday? I don't know. Anyway, all I know is that when people started talking about McDonald's rolling over and falling apart, I went and looked at it, and I found that yes, we did make an extension on the upside and we started to come off of that area, but it couldn't go lower unless we broke the symmetry of the prior rally swings. So what I did was just again project the prior declines within the uptrend from the new high, and then it just happened to overlap a 618 retracement. And basically, as long as we continue to hold above here, we had to look for a possible resumption of the rally rather than this stock continuing to roll over. So this is what happened. So here was here's an example of a recent trigger on a 15-minute chart. A 15-minute chart trigger is something you can use for a swing trade entry. And what we saw was taking out a prior swing high over here, and we also had the moving average crossover. I like to use the 834 EMA combo. The aggressive swing trade trigger is a 15-minute chart. The not so aggressive one is a 30-minute chart. This example is on the 15, so again it took out the prior swing high, had the moving average crossover to the upside, and if you took an entry there, then your initial stop could have been defined either underneath this area or underneath the the low end of the zone. So bottom line, it hit, it held, it triggered an entry. I don't know if we're going to make the target, but the typical target that we shoot for is going to be the 1272 extension of the swing into the zone, which is 163.34. Now, since we don't always make the targets, though we do shoot for them, it's really a good idea to at least have a break-even stop or better. I think most of you would probably want to protect profits versus some of you might want to just give it a little bit more room to breathe.